Okay, so what's going on? What's driving this here?
Well, obviously, if you're looking at the Nasdaq, everyone wants to compare it to 15 years ago, and it's just such a dramatically different index than it was then. 5,000 stocks in the index now, back then, only about 2,500 now. Almost 80% of the stocks in the Nasdaq at the bubble peak are gone, either M&A or bankruptcy or delistings. But what that tells you is that the stocks that are in it now are such a different variety of stocks. They're by market cap about twice as big as they were in the bubble heyday, obviously because there's half as many stocks in it. And really you have to look at, the biggest sort of name brands in the Nasdaq. Apple makes up about 10% of the Nasdaq.
Yeah.
And biotech has really been a strong contributor to the performance. Biotech's just been on a roll the last decade.
Which we didn't have back in 2000.
Right.
Not to this extent. But interesting you mentioned Apple, though, because the number one stock back in 2000 on the Nasdaq was Microsoft. That's number two now. Apple is the biggest one on the Nasdaq.
Apple,
right?
And by far and away, 10% of the index. It really makes up a bigger weighting in the Nasdaq than it does even in the S&P 500. So, but that said, the Nasdaq actually is a little bit less tech heavy than it was back in the day. Closer to about 40% tech weighting compared to closer to 60 back in the bubble day. So it is a little bit more diversified than it was.
I think that's a really important point because valuations, right? They're much tamer today than they were in 2000, right?
Absolutely. The Nasdaq as a whole, about 32 times earnings compared to a peak of about 170 times earnings, and not to mention all the companies that didn't have any earnings back then. Also, the cash on companies' balance sheets is really just tremendous. The Nasdaq companies have about $1.7 trillion worth of cash just sitting on their balance sheets. That's about 18% of the market cap. So whether it's buybacks or dividends or whatever they want to do with it, that's a pretty strong underpinning for the index.
Right, and a safety net, right? Because if all hell breaks loose, they've got trillions of dollars in cash to turn to.
Exactly.
On the S&P, the Dow, though, what is driving those record highs?
Same thing, really just confidence in the economy. I mean, it is kind of an interesting time now because we are looking at most likely declines in earnings in this quarter and the second quarter, according to the analyst estimates. So really the question is, can these valuations continue to expand and outpace the earnings growth? And that's really what's on a lot of people's minds right now that could potentially, flatten out the rally for a little bit until those earnings catch back up.
All right, Mike, thank you so much. Mike Regan of Bloomberg News.